Hey guys, welcome back to the channel. In today's video I'm going to be going through how I made $4,500 in under 15 minutes, and to be precise it was actually 11 minutes. So it was a very quick trade, a nice amount of money to make, and I'm going to be breaking down how I did this on the charts through this video. But before I do that, I'm just going to show you the screen grabs of the profit secured across the 3 accounts to prove that it was a legitimate trade. Right, so this is the first account payout. So we can see I've used a lot size of 22.99. I had a couple of limits that I ended up getting rid of. I think the initial sell limit was swerved, and the second buy limit I accidentally miscalculated the position of entry, which was fine. I realized straight away I just needed to edit it, and I just thought I'd delete it, and then I recreated it into a new one and set a new limit area of where I thought would be better for a buy. This is in British pounds, by the way, so after commission, £3,121.97. Okay, so here's our second account. This is the one that is slightly smaller, and as you can see, after commission, £848.90. And then moving on to the third account. Okay, so this is the third account. As you can see, it's a lot less. There's only $5,000 in this account, and the reason for that is because I just bought a accelerated MyForex Funds account, so I just thought I'd put it side by side with my current trading. If you don't know the accelerated MyForex Funds package, basically you pay up front, you don't have to go through the testing stage. You basically pay to have the account from the start, and there's the similar rules where you can't hit more than a 10% loss basically of the account size, otherwise you lose the account, which is fine. And I went for the emphatic model because I trade on the 1 minute time frame predominantly, so I needed that higher leverage. So this account is in dollars, so $181.70 after commission, and that's proof of the third account. So now I'm going to hop over to the charts and walk through my thoughts behind this trade and how it went, why I decided to buy against high time frame analysis, and I'll just go through it step by step. Okay guys, so you can see we are on the 4-hour chart at the moment. I've just gone back in time. So we've scaled down to the 4-hour, as this is what I like to use the most in terms of higher end time frame analysis. So we reacted here from a daily supply zone, and it was within premium of the daily leg. Then we had quite a strong impulse to the downside, and we broke structure. And personally, I like to see one break of structure with a full body close, which we ended up having this candle here that broke this previous low. And once I've had one swing break of structure, such as this, that then denotes to me that we are switching trend. So this 4-hour break of structure now tells me that the trend for the bullish move and momentum is over, and now we're looking for continued sells and eventually targeting this low here. As you can see, we broke structure and we reacted from this previous demand zone that was unmitigated. From this, we know we've reacted from a demand zone that's pretty significant, hasn't been mitigated before, so we're grabbing liquidity. It's a strong area where price previously tested, and we pushed up and broke structure. So this is our first confluence to say that we might see a reaction from this point. Second of all, we've had that break of structure, that first initial break of structure, which says to me we are due a pullback before the next move to the downside. And we have the premium discount tool, which shows us that we are within a discount price. So anything below the 0.5 region is discount for buying, anything above is premium for selling. So there's 3 good confluences that suggest to me, and they're telling me to look for short-term longs. So now we go on to the 15-minute time frame, and we recently had a 15-minute break of structure to the downside, which coincides with the 4-hour bearish structure. However, since then, we've had a 15-minute bullish internal break of structure. A 15-minute IBOS to me is a signal used to identify the beginning of a pullback on a higher time frame, for example the 4-hour time frame. So we have the IBOS. From there we sort of slow down a little bit, come back into a little bit of demand here, and then we push up again, creating another internal break of structure. So 2 internal break of structures, and we are looking for a 4-hour pullback. So what do? Now we are going into the New York session. We identify areas of demand where price may retrace to. Okay, so at this point I identified the 3 areas I thought were significant areas that we might tap into and move to the upside from. So the first one here is not my favorite. We aren't within discount price, and not only this, but it's quite soon after the push up, as you can see, and we have unmitigated price below. So this swept no liquidity at all, meaning it's likely to break. So I didn't like this from the start. And the second one here in the middle, we zoom in a little bit, we can see this didn't grab liquidity either. And it's so close to this prior demand zone here that it's likely that if this area is going to get used for a liquidity grab anyway, and sellers might enter the market from this point, then the momentum is just probably going to push us through this ever so slightly and at least tap into this area. So for me, this is the highest probability. So we'll play it forward and see what happens. So you can see the first one's broken and we're now testing the second one. So I'll remove this one and we'll continue playing. Okay, we have now broken this one as well. We've had a full body close and we're now interacting with this final one. So at this point, I drop down to the 1 minute time frame to see if I can identify an entry model relevant and then be able to execute a long. Okay, so we've dropped to the 1 minute time frame now, and this blue area is part of the 15-minute demand zone that I identified from earlier. So now what I want to see is a sudden reaction in price. I want to see that the buyers are stepping into the market and there's a good amount of volume ready to continue the push to the upside. So far we haven't had that, and we just are breaking lower and lower to the downside. So we've had one breaker structure there and another one here. So at this point, really, I want to see at least an internal breaker structure or a swing breaker structure on the 1 minute time frame. So this is our swing high here, and this would be our 2 supply zones we want to see price to break through, and then we can see that the seller's supply chain is failing. So we'll play it forward. Okay, then we've had another breaker structure to the downside. It was quite impulsive. So from here, if I'm interested in looking for buys, I want to see a nice V-shaped reaction. I want to see this push down and then pull straight back up, breaking this high here before looking for a buy, because right now there is still a lot of seller pressure in the markets. So we ended up getting the break of structure that we wanted. So I'll denote this as a 1 minute break of structure. Okay, now I'm happy to look for an entry at this point. So where do we look for? So we've got this extreme area here, and we also have a flip zone here. Now, the reason why I entered off the flip zone in this scenario is because here we have unmitigated price, yes, ever so slightly. If we look at the difference between the wicks, there's a little bit of unmitigated price. However, this candle here was quite a small one with no real wick to the downside. Then the sellers tried stepping back in, grabbed liquidity below this buy candle here, and then we pushed up and pretty much created that V-shaped breaker structure we wanted. Now this area is too close to the breaker structure for me. It just isn't significant enough. It's a bit more messy here before we get that final push. This really, to me, was the apex of the move to create that break of structure. So I've got these 2 areas, and I'm pretty certain that we're going to get a reaction from this area. So I use my Gambox tool, and my entry I like to do on the EQ, or the middle of the Gambox chart, with a 2.5 pip stop loss. So we cover a bit below this area in case price wants to grab liquidity. And at the moment, with recent price action, I'm just doing 1 to 5 trades, so I'm only aiming to make 5% per trade. So we'll play this trade out, see how we get tagged in, how much drawdown we go into, and what the end result is. So you can see we end up getting tagged in, and pretty quickly we hit the 5% target. So in the space of 11 minutes, we hit take profit. So this has been a sort of quick breakdown of how this has happened, why I entered where I did, and the entry model and entry criteria I was looking for. Now, sometimes this happens in trading and it's just part of the game, but you could target the 15-minute high, and I think it was slightly higher than this. If we just drop back, yeah, the swing high is this wick here, the top of this wick, so around 18.6R. And if we actually play it forward, it did actually go all the way up here without taking me out, and some more, you know, grossed at nearly 30%. We might end up hitting that. Yep. So we ended up hitting 30R on the trade, and I only scored 5. But the thing is this doesn't happen too often. It used to happen quite a lot, but with recent events and world economics, these sort of trades have just become more rare. And through data testing, I figured that the best way to keep profit and a high strike rate was to reduce my risk reward and take profit target to 5R or 5%. This is because I've experienced times where I've hit 5, 6, 7% profit, hoped for a trade such as this where it goes up to the previous swing high without any issues. Hasn't, it's reversed and hit me out for break even. And I think over the course of the past couple of months, I'd recorded 3 losses and 9 break evens, and I think 8 of those, maybe all 9, I can't quite remember, either 8 or 9 of that break evens hit 5%. So, you know, it's worth taking it out for 5%, because if you can get more than 1 win, 1, 2, 1, 3 wins, you're laughing. If you get 2 wins a month and 2 losses, that's still 8% a month, which is amazing. You know, you don't, probably said it before, but you don't get anywhere near that from a bank account. So it's well worth just securing your profits earlier. Yes, sometimes this may happen, rarely, but your strike rate remains higher, and 9 times out of 10, it won't hit this target area. It'll go to 4, 5, 6%, and then just drop that down, taking you out for break even, no profit secured. So that pretty much wraps up the video of how I made $4,500 in under 15 minutes. I hope you enjoyed this video, and it was a good insight into how I trade the Forex markets and what technique I use. If you'd like to understand more and learn how to trade similar to myself and my other students, then there'll be a link in the description to my website. You head over to the packages page, you'll be able to see the course I have to offer. Thanks for watching, and join me next time for the next video. Bye.